This is Investment Perspectives with Brad Kimes. Daily live streaming interactive. Featuring Mrs. Backup. Subscribe, hit the notification, smash the likes. Now, here's Backup Brad Kimes. Come on in.
Welcome back to Investment Perspectives, everybody. We got a lot of news coming in late yesterday afternoon, early evening, and overnight, and it is going to take quite a few videos to break it all down. All right, so we had a recent video from Ripple come out with Brad Garlinghouse. We're going to break some of that down, not the whole thing, just certain segments of that, because I'm sure everybody's pretty much seen it for the most part. Then we're going to give a shout out to Savvy, who reminded us it will be live stream government webinar today or hearing today, and you can participate. I don't know what my schedule is today. If I'm able to stream it, I will, but if not, you can get it right here on my Twitter feed. Thank you to Savvy for that. Big shout out to him. Now let's move up quickly and start with this, because we did see the video. We're going to talk about some moments in that video, and then we're going to talk about some important points that he made and how it reflects to years past and what it may mean for Ripple and other companies moving forward. Okay, and Wrath of Conman here had a great post, found some motion on PolySign. Let's take a look at that now and get into this. So shout out to him for that little catch. And here is the link for the virtual hearing real quickly today for the House Committee on Financial Services. Here it is, the SEC filing here, information from PolySign. If you scroll down, this is what Wrath of Conman was talking about here. And it's right here, the offering and sales amount. They had a total offering of 2.7 million and a total amount sold was 1.5 million. And it appears, if I'm not mistaken here, I'm trying to find that where I was earlier here, but there is a date for this, and he shared it. Matter of fact, let's go back to where his post was. He has a screenshot, I believe, of it, if not the link itself. So, okay, he has the same exact thing on the same page here. Okay. All right, so there it is right there. Here it is, yeah. So 6/9/2020, here it is, from Secretary and General Counsel Sherry Porter. So there it is, PolySign. There's a signature, e-sign, or what have you. And we'll just have to keep an eye on this. So they look like they're making some moves, some positions, making some offerings, and we got to keep an eye on it. That reminds us, which I look at almost daily, to keep an eye on whether Ripple has filed anything. I've also submitted for the email notification on that as well. We haven't seen any motion out of that, but we will continue to watch it, and it's a nice reminder to look for. And what are we watching for? The S1 and the prospectus information to start. So keep an eye out for that. I don't think we're far away. I really don't. Okay, so moving on from those things, let's go ahead and get into the few points that we want to talk about here that Brad makes. And I want to start at about 1 minute, just short of that. And let's listen here for the first couple minutes.
What it means for our industry, what it means for Ripple, and even kind of the macroeconomic outlook. It's unbelievable to me. If you go back in time to the global financial crisis
of 2008,
sometimes called the GFC, unemployment filings over 18 months of what was considered that recession totaled 15 million unemployment filings. We've been, in this pandemic experience, and there's been 30 million in 6 to 8 weeks versus 18 months or 15 million.
Does that put a little perspective on it for you, what we're dealing with here? And the stock market numbers are up. I know they had a down day yesterday, but for the most part, they're up because the Fed has been buying everything.
30 million unemployment filings. That's just in the U.S. And so I, by no means, am trying to be the Grim Reaper and describing, what I think all of us are feeling. But I do think there's some examples where it's going to get worse before it gets better.
Now, listen to what he's about to go into, because I want you to keep in mind when he breaks this down. We've talked many times here about global reset or debt jubilee, and the fact that, the United States is printing so much money to throw down this hole that we are actually in. And that can cause what people refer to as a melt up. Imagine if you had a house that was burning, and let's just say it was actually just the bedroom of that big house. The fire department came and put enough water on your house to not only put out the bedroom, but let's say it equaled the total volume of water of Niagara Falls for 1 24-hour period. The house would be totaled not from the fire, but from the water. The printing of the money is the water. And I think this is what he's alluding to, and listen to what he goes into now.
You know, if you look at the unemployment filings, and the government obviously is trying to react aggressively to address that. Here's a headline from a couple weeks ago. You know, I think the government stimulus now stands at about $3 trillion here in the United States alone. You know, I expect it's going to continue to grow. And I think that, while probably necessary to prevent an even more significant macroeconomic calamity, it definitely is going to have an impact on the future. And I think I believe, result in the debasement of fiat currencies. And you are seeing that in some emerging markets already, where the exchange rates have started to shift. But even here in the United States, it's a real factor. One visualization of this, and you know, in history, looking back, is on the next slide, is something we saw happen in the Weimar Republic, which was what we now call Germany after World War I, where they printed money to, frankly, fund the war effort, and you know, that resulted in massive inflation after World War I. In 1923, people literally, as this visual shows you, were carrying wheelbarrows full of printed Deutschmarks in order to buy a loaf of bread. I'm not that bleak of an outlook about the US dollar, but I do believe it would be disingenuous not to acknowledge that what's happening here right now will certainly have an impact over the coming years. And, you know, we won't see it just kind of go away quickly, because the things we're doing now will have second and third order effects.
Okay. Now, granted, he walks it back, but he shows you the extreme example. And then he feels like it is going to be years with the secondary and third layer effects of what is going to take place. Look, I'm not trying to put a flag on the moon to say that we've been talking about this very thing on this show and with co-host Cryptopolis about the depression of 1929 through 33 and the talk of reissuance of $1 with the Allied forces in Germany, and about burning Deutschmarks because they were worthless. And we've talked countless times about the money in Venezuela is like, you know, just paper laying in the streets. It's worthless, right? They're making handbags and things out of dollar bills down there because the money's so worthless. You know, he says he doesn't believe it'll be that bad, but there is going to be basically systemic effects for years to come from this. Okay. Now, there are other points in this video that are fantastic, and I think a lot of people have made very good posts in highlighting them. And in fact, I want to shout out to Crypto Wolf, who makes a great point later on in this video. Ripple CEO Brad Garlinghouse said the current state of global economy is placing Bitcoin and overall crypto markets in a prime position for a bull run rally. We're going to continue to focus on how we use XRP as a real effective tool for payments. He sure did. And he also talked about potentially a basket of cryptos, which I thought was really interesting. And I think we'll look at that comment here in a second. Then there was also to talk about the progression of what they've done. Let me move forward here. But before we do, I want to remind everybody, like, why is it so important to talk about the current situation, the debasement of currency, because of all this printing and flooding the market with cash to try to cover the big gap in what's taking place here? Because once everything starts to recover and come back, you're still going to have all this cash that's out here, which is a debasement of the currency to adjust for it, right? Okay, so with that being said, another crisis. Not another recession, which they already say we're in. Another crisis. That's the real deal. Well, why is that important? Well, it's not important because I'm a doom and gloom guy. I'm a positive guy. In fact, I want to go back now to the 2008 crisis, in that era, okay? Let's look at some of the crisis companies, and they weren't crisis companies serving the crisis, but what I mean by that is companies that arose from the ashes of that global financial crisis. I'm going to run a list for you. GitHub, right? A platform that allows for software development, 08. Airbnb, around the same time period there, 08, 09, I believe. Google venture arm, 09. Square, 09. Slack, if you don't know, which is like a work messaging platform, 09. Uber, March of 09. Venmo, October of 09. WhatsApp, 09. Groupon, 08. Instagram, 10. Pinterest, 2010. Cloudera, 08, which is a software data warehouse if you're not aware of it. Look at the list of these companies that were born out of that crisis. I propose that this is exactly what Ripple's going to do, because if you look at what it's designed to do as on-demand liquidity, as a bridge asset to supplement global trade and the whole everything else, I believe we all know the drill. It is poised perfectly to deal with this scenario that is upon us. Ripple will rise from the ashes out of this situation, and out of it, I think it turns around and grabs a hand and brings the world with it. All right, now let's keep moving here. I want to keep moving and move to another portion of this video just to skip around here. Let's go to and the entire thing's great, obviously, but let's start here.
And for correspondent banks to be able to facilitate payments without some of that pre-funding. We saw in 2008, there really was a first wave of correspondent banks changing they limited access to money transmitters and remittance providers, resulted in slower, more expensive payments than some of the traditional networks. But it definitely sparked a big boom in digital remittances. And I think what we will see happen now is banks are going to reassess the cost of being in some of these markets where the overhead, both in terms of cost of capital, but also the overhead in terms of compliance costs. And I think they'll reassess that and decide what they want to change. Remittances are relatively small volumes for some of the biggest correspondent banks. And I think we're going to see another wave of that de-risking, which, again, as I said, I think is opportunity for Ripple.
He's talking about that whole moment of that rebirthing, right? Just like you saw Square and all these other companies, Venmo and WhatsApp and all these other things pop out of that time period. He's saying you're going to see a reevaluation from the banks and the financial system to de-risk their position, and that allows for a company like Ripple to excel. Let's keep going.
One manifestation of that is that I think it has helped the product market fit of some of our core products. So we have always had the tip of our spear target customers that are digital first. I think the value proposition of on-demand liquidity, as I was just describing, or as we call it, ODL, only increases. This is a quote from one of our current customers, describing ODL as a lifeline, given their own liquidity dynamics. The other thing that's been interesting to watch as we went through some of the volatility over the last handful of weeks is you saw in mid-March some really dramatic volatility in the Philippine peso, where actually some of our customers, the only way they were able to get liquidity into and out of the Philippines was through ODL. We certainly did have strong momentum as we kind of finished up Q1. Just to give you a couple data points, we saw about an 85% increase in volume across RippleNet between Q4 and Q1. That's obviously really, really good, despite kind of ending March with a slowdown in growth. Specific to our on-demand liquidity, there was a 190% increase from Q4 to Q1. So we saw some of our big customers, a player in Thailand, go live. It's driving a lot of volume. We had forecasted 20 new contracts. We ended up signing 28 new production contracts in the quarter. And so despite the dynamics of the pandemic, we were able to finish the quarter on a strong note.
This is clear evidence to me that what is happening now on a global level is an accelerant for what Ripple has built with RippleNet. 80% increase with a downturn in March in global activity. This to me is like the biggest sign on the wall that says we are built for this. We are built for this moment, and companies and banks are recognizing it. All right, let me skip forward really quickly here to this next spot. Trying to just make it quick and easy.
And particularly when we see the dynamics going on in the COVID world we're living in, those dynamics are only going to get more accentuated, I think, during the balance of 2020. And I think it's important for really the globe to understand that Bitcoin mining power today is controlled in China, and what are the implications of that as we look at, many governments around the world taking a very strong stance about Huawei and the build out of 5G mobile networks. So it'll be interesting to see how that plays out. I do think a priority for us throughout Q2 and really the balance of 2020 will be to continue to push to get more clarity, frankly, not just for XRP and all of the participants in the XRP ecosystem, but really for crypto more broadly. Moving to the next slide, look.
Okay, let me, okay, we'll go into this right quick. One thing I do want to say real quick before we go on here is that, well, actually, let him finish this last little minute here, and then we'll talk.
There's no question that a lot of uncertainty remains, and I think this downturn will separate the wheat from the chaff. This is an expression from, my roots, having grown up in Kansas.
Get them, Kansas.
Our top priority will continue to be all of you, to make sure that we do whatever we can to make sure people are safe. But it's also to press our advantage. I use the word prudently here because we're in a really strong position from a balance sheet point of view. We're in a strong position in terms of customer momentum, activity on the network. And so really, really pleased to see what's going on both at Ripple and frankly across all the different activity in the XRP ecosystem. And then finally, we have been, I think, successful because we have been very focused on our key priorities, and that has served us well. And I want to make sure we continue to do that. Last slide, just to...
All right, so talking about the fact of being prudent and pressing their advantage, he's still remarking that we are still very, very liquid in this time, and we are going to use that to our advantage, but be very smart and prudent about it. Okay, the other thing here is the ruthless prioritization and focus. This is really what I wanted to touch on, because I think this is exactly right. If you look at what he's saying, the ruthless prioritization and focus, this comes back to what Ashish Birla just talked about yesterday and the day before, right? When he was talking about, focusing on the SMEs, the lower value, high frequency payments, and not concentrating in these moments on the larger value payments, or maybe even the larger banks at this time, right? Some people took that as a negative connotation. Oh, things aren't working, or this, that, and the other. I don't see it that way at all. And I'm not trying to sell anybody or convince you. I just want to share my perspective. That's where we got this name for the show, right? So, I believe what they are doing now, because we know at some point they're going to IPO over the next 6, 7, 8 months or what have you. Because he said in January that they intended to IPO within the next 12 months. So in my eyes, it tells me that tightened focus, that ruthless prioritization and focus is about really, really tightening down on what you've connected with now, making that work as you get closer to that said IPO opportunity or that moment. If you're looking at the ability of getting institutions to buy in and the larger players to participate in an IPO, you want to tighten your focus and get very, very laser-like focused on what you can do right now. And I think that also serves the larger narrative of the moment that we're in economically on a global scale. I played the video the other day of Mr. Ahmed from PayPal in a congressional hearing last year, December of 2019, talking about how they could use XRP specifically right then for low value payments. So there it is. All right, guys, look, there's a lot more news to cover today, so stick around and keep your head on a swivel for more videos. We're also going to talk about Marcus Treacher and the ISO 20022 SWIFT connection. What's going on with that? Delay, not a delay, who wants it, who doesn't? We're going to get into it and how it can help everything from not only banking to the shipping sector, and we'll cover that as well. All right, guys, hit the like and subscribe if you like the content. Make sure you share it with others, and we'll catch you on the next one.